Hi friends, welcome to new video. Today's video we are going to discuss about Competition Act. Competition, the word has created a lot of value to me. Let me share you a real-time example of competition. There was a time when we all started using mobile phones along with internet. We'll be able to see a little bit of constraint in terms of internet usage. The reason being the internet are provided for a very higher rate by the time. So for 1 GB of internet, we are supposed to pay 300 to 400 rupees. And now, after Geo entered into the market and Geo started providing internet for free for Geo users, all the service providers started providing internet for a very lesser rate. So now, this suggests that as a result of competition between Geo with other telecommunication service providers, the end customers are benefited. The end customers are able to get internet for a very reasonable rate, and I'm availing that internet very lesser rate. So that's as a result of competition we are getting that benefit. So let's get into the topic. Competition Act. Competition Act 2002. The objectives of Competition Act is to eliminate practices that are having adverse effect on competition. And the next point is to prevent and sustain competition, to protect the interest of consumers, to ensure freedom of trade in markets of India. So, Competition Act has been created to serve these objectives, and these are the objectives of competition. So, once in CMA as well as CA final have been tested, objectives of Competition Act have been tested. So, please bear in mind these are the objectives of Competition Commission. Now, let's move on to the next area, which is the non-applicability. With relating to non-applicability, Competition Act does not applicable to all the government functions, all the government activities. Nobody cannot, interfere into government activities. Nobody cannot compete in terms of, printing notes. So this act is not applicable in terms of government sovereign functions, atomic energy, currency, police, and defense and space. So that's one quick non-applicability factors, non-applicability areas in terms of Competition Act. Appreciable adverse effect on competition. What is appreciable adverse effect on competition? Appreciable adverse effect means where there will be agreements which are anti-competitive. No, when I say agreement, I don't say it should be in writing. Agreements can also be in oral. Agreements can also be understood by both the parties in any mode. So, when I say agreement, I don't say it is legally enforceable. When there is agreement which are anti-competitive, whether or not in writing, whether are legally enforceable or not. And then abusing dominant position. Abusing dominant position means person who are having the powers as a result of reaching a top level in the respective industry, they should not abuse their position. So this is point number 2. And the point number 3 is a combination of point 1 and 2. So what is adverse effect on competition? Adverse effect on competition means it can be either point 1 or it can be either point 2 or it can be a combination of point 1 and 2. Okay. Now let's discuss about one of the important definitions of Competition Commission. So cartel, the definition suggests that an association of producers, sellers, or distributors, traders, or agree among themselves to control production, distribution, and prices. Okay, that means a combination when an agreement between producers, distributors, sellers among themselves to come to an agreement that they are going to restrict some prices, they are going to restrict some production. So this is cartel. The real-time example of cartel is recent times we have faced a situation where the prices of onions have increased dramatically. And the reason for that is there are a lot of people suggest that there are no monsoon and there are no productivity in terms of onion, as a result of which onion prices have increased. And there are certain allegations. There are certain allegations in terms of certain producers and certain sellers that they have restricted, selling the onion sales. The result of which there was a huge demand for onion, and the prices have gone up, and we are able to see some rise. There are few people also suggested that there can be chances of cartel. So now we understand this word cartel. Cartel is nothing but an agreement between products, any kind of manufacturer, seller, or distributor, with the intention to limit the production. Okay, I'll tell you one more example. You have to say whether it is related to cartel or not. So there can be an agreement between producer, manufacturer, or among other persons with the intention to increase the productivity. Will this amounts to cartel? No, this does not amounts to cartel. Cartel suggests the agreement with an intention to degrade the production. It can be an agreement among the people, among the group of traders, product producers, manufacturer, with the intention to limit the production. That's cartel. Now let's move on to the next category. Competition Commission of India is a incorporated body corporate with perpetual succession. Similar to SEBI, they also have their own powers. They also have right to buy the asset on their own name. They can acquire movable and immovable properties as well. So that's about Competition Commission of India. So this Competition Commission of India is going to regulate the competitions in India. So now let's see the composition of Competition Commission of India. The composition is one chairperson and not less than 2 members and not more than 6 members. That's the composition. And qualifications. What are the qualifications for these members? The qualifications are 15 years professional experience in trade, economics, business, commerce, accounts, industry, public affairs, finance, with or without judicial background. That's the experience required for these members, these chairpersons. Okay. Now and the next qualification is they should work for a full-time membership. They're not here for any kind of part-time activity. So if they are going to be a member, if they are going to be a chairperson, it's going to be a full-time work. There is no concept of part-time work here. And appointment, or who is having the power to appoint these chairperson and other members. The selection committee is having the powers with respect to appoint these members. What are those selection committee? These selection committee consists of chairman who is Chief Justice of India or his nominee, and Ministry of Corporate Affairs secretary, and the third one is secretary from Law and Justice. The fourth one is 2 other members from industry experts. Okay. Now these are the selection committee who are going to pick the chairperson and other members required for Competition Commission of India. We should not get confused. With the selection committee members and the members of Competition Commission of India. So that's the difference between the members with respect to Competition Commission of India and selection chairman, who should be a Chief Justice is nominee, and Ministry of Corporate Affairs secretary, and the third one is secretary from Law and Justice, and the fourth one is 2 other members from industry experts. So okay, that's the composition of selection committee. Let's move on to the next topic. Tenuity of members of Competition Commission of India. So okay, the tenuity is 5 years. They are eligible for reappointment, and the maximum age limit is 65 years. During this period, they are eligible to act as a member or as a chairperson. Okay. Once, if any of this person have been moved out, if there is a vacancy, that vacancy can be filled immediately. If the chairperson moved out, if there is a vacancy for a chairperson, the next senior most person will act as a chairperson here. Okay. Voluntary resignation accepted. It's a 3 months notice period. They have to serve the notice and they have to give the notice and serve for next 3 months. Central government has power to remove any of the member or the chairperson if those members and chairpersons are unsound mind, insolvent, whether they found to be employed elsewhere. In these situations, central government will remove these people. and if they have involved in any kind of offense involving moral turpitude, if they have any financial interest in terms of the transactions, in such a case, central government will take action. When I say financial means, when there is a transaction between competition commission against other person, and these persons have benefited as a result of such transaction. So this fourth point, financial interest, suggests that as a result of some transaction where a group of members or competition commission of India members are benefited out of the transaction, then that amounts to financial interest. There shouldn't be any financial interest, whereas the benefit should not go to the members of competition commission at any point. So in that case, if any financial interest goes, if any benefit goes to the competition commission of India members, then we can conclude that they are having a financial interest in the transaction. So they will squarely covered under this fourth point, and in that case they will be removed out of the position. Central government will take action against them. And the last point is abuse this position. If they abuse this position for the personal benefit or for any other purpose, if they abuse their position, they'll be thrown out of the position. Okay. Now, central government, with respect to the last 2 points, with respect to financial interest and with relating to abusing their position, they will consult Supreme Court before taking any final call. That's with relating to point A. And point B, central government should give opportunity of being heard before taking any calls. And after removal, the next 2 years, none of these people should work for any of the competitors, any of the parties who comes in a proceeding. That means after removal for the next 2 years should not be these people, the chairperson and other members. They should not work. They should not employed in a company which comes in a proceeding. That means after the removal, after the resignation, they should not work with any of the parties where such parties have come to the Competition Commission of India for any of the proceedings during the year. Okay, there is an exception. Like they can work with government company even if that government company comes as a party to the proceedings. If there is a argument, if there is a case between Competition Commission of India and the government and a state government or central government, in that case, after the tenuity or after his resignation, these people can work with government. That's the only exemptions. Okay. Now, what are the powers of Competition Commission? Competition Commission shall have the following powers. Following civil powers: issuing summons, enforcing attendance. That means they can call people for investigation. They can enforce the attendance. They can accept what is right or what is wrong. They can suggest. They can seek affidavit. They call people to produce some documents. They examine the evidence, and they have powers to do ex parte orders as well. And okay, let's go to the next important area, which is appointment of Director General under Section 16. Now, in Competition Commission, Director General will have superior power. So, Director General will conduct the audit. Director General will conduct the investigation in terms of any issues. So, Director General will be appointed under Section 16. Okay. Competition Commission has power to appoint experts. At certain situation, Competition Commission, if needed, they will appoint experts, professionals to investigate the proceedings. Okay. They have that power as per Section 17. And Section 3. Section 3 is very, very important. Anti-competitive agreements. So let's discuss about each of these agreements in detail, which are very, very relevant for our examination. First one, tie-in arrangement. What is tie-in arrangement? Tie-in arrangement is nothing but a combo package where people are forced to buy the combo even if they are not interested in the combo. For example, if you want a gas connection where you are not interested in buying a gas stove, okay, the other person, the seller, is forced you to buy gas stove. Okay, otherwise you will not get the gas connection. This is a combination. This is a tie-in arrangement. When you go to the local ration shop, if you want the ration, if you want the subsidies, the rice or other products, the person will push you to buy other products so that you will so that the person will give the
main product.
right product. So now the point is that when customers are forced to buy the other product, so okay, which is anti-competitive, okay, which is an anti-competitive agreement. So Competition Act does not encourage tie-in arrangement. So the next one is exclusive supply agreement. That is nothing but the supplier restricting the purchaser to not to do supplier restricting the purchaser not to go for any kind of purchases with other parties other than the supplier. So the supplier here giving a kind of a condition to the purchaser that he should not deal with any other kind of suppliers other than me. So in that case, it will be covered under exclusive supply agreement, which is anti-competitive agreement, which are comes under this anti-competitive agreement, which are not acceptable. And the next one is exclusive distribution agreement, which is nothing but the restricting supply of any goods or allocate any area for disposal of goods. In terms of exclusive distribution agreement, restricting supply of any goods or allocate any area for disposal of goods. Whereas the supplier restricting their supply in terms of any area, restricting the supply in terms of any goods, and that has created an appreciable adverse effect, then that will becomes under exclusive distribution agreement. And the next point is refusal to deal. When the supplier refuses to deal with certain people, with certain markets, that leads to competition. And resale price maintenance. When you say resale price maintenance, suppliers suggest that you should not charge below to this point, that is resale price maintenance. For example, suppliers suggest not to sell below a particular price. Say, for example, a product price is 20 rupees, where the MRP is 20 rupees, and suppliers suggest not to sell below 20 rupees, which is resale price maintenance. But whereas if suppliers suggest not to suppliers suggest to the other person not to charge beyond this price, will not comes under resale price maintenance, that is MRP. If suppliers suggest the other person not to charge more than this amount, then that will not come under resale price maintenance. Okay, that is MRP. MRP is not resale price maintenance. And then abuse of dominant position, section 4. There shall be an abuse of dominant position by an enterprise or a group, directly or indirectly, imposes unfair or discriminatory. That means abuse of dominant position means it can be a combination of direct or indirect with point 1 and 2. What is point 1 and 2? If the person create a condition clause in a purchase or sale of goods or services, or if a person directly or indirectly imposes price in purchase or sale, which is a predatory price. What is predatory price? Predatory price means sale of goods or provision of services at a price which is the cost as may be determined by regulator of production of goods or provision of services with a view to reduce competition or eliminate the competitors. They fix some price with the objective to reduce competition. For example, I don't charge anything for this particular product, as a result of which this competition gets affected. The even we can say that the example that we have previously referred geo were related to predatory pricing, but in the TRI Act there was an amendment before geo comes into picture that free internet service providing is acceptable for new service providers. So based on that clause, geo has comes into the market, they'll be able to provide services for free. So based on that clause, geo has escaped from certain proceedings. Abuse of dominant position, point A we have just discussed. Let's go to point B. Point B, abuse of dominant position. If the person limits or restricts production of goods or provision of services or markets or technical or scientific development related to goods or services to the prejudice of customers. So which is also comes under abuse of dominant position. When I say abuse of dominant position, it relates to 2 points. it relates to 5 points. Okay, whereas point number 1 directly or indirectly imposes any condition or do predatory pricing and limits or restrict production of goods or no production of goods or provision of services or technical or scientific development relating to products, limits or restricts related to production or selling of goods, and limits or restrict technical aspect or scientific development of a product, that will also be covered. And the third one is involved in practices or procedures resulting in denial of market access. If the person directly or indirectly stops other person to get into the market, then that will comes under abusing of dominant position. And then the fourth point is make conclusion of contracts subject to acceptance by other supplementary obligations, which by their nature or according to commercial usage have no connection with the subject of contract. It's something related to tie-in arrangements, makes conclusion of contracts subject to acceptance by other supplementary obligations, which by their nature or according to commercial usage have no connection with the subject of such contracts. So these are all related to abusing of dominant position. Using the supreme power, they enter into certain markets. Using the supreme power, they restrict other people to get into the market, related to abusing of dominant position. So dominant position, I've just given the meaning, which is nothing but the supreme power. Dominant position means position of strength enjoyed by an enterprise in India, which enables you to operate independently of competitive forces prevailing in the market. Okay. Competition Commission, while inquiring into any case, whether it relates to dominant position of an enterprise, inquiry into certain agreement and dominant position of India, Competition Commission may inquire on its own motion when they decide they want to go for an inquiry into certain parties. They'll go for inquire. And the second point is on receipt of any information in any such manner. If they receive any information against any of the parties to the competition, then Competition Commission may start their investigation, may start their inquiry. And if any references from central government or state government, Competition Commission will start their inquiry. That's the third point. Competition Commission, while determining whether an agreement related to appreciable adverse effect on competition, they will look into these factors. They will see whether is there a barrier in terms of market entry. That's point number 1. And point number 2, whether the other person is driving the existing competitors out of the market. And foreclosure of competition by entering into market, whether is there any player comes into market as a result of which the rest of the competitors going out of the market. Okay, foreclosure of competition by entry into the market. And the fourth one is accrual of benefits to the customers. They will see a particular situation through these angles. They will also see what are the benefits going to the consumer. Based on that, they will take a call. I don't think they have taken a call with respect to Geo, and because the benefits gone to the because in terms of Geo users, not even Geo users, everybody have been benefited as a result of Geo's entry. Promotion of technical scientific development. So now, while determining whether an enterprise enjoy a dominant position or not, while determining, this is very, very important question from examination. So while determining a particular enterprise enjoys a dominant position or not, Competition Commission will look into the following areas. They will just check the market share of the enterprise. They will check the size and resource of the enterprise. They will check the size and importance of its competitors. They will check the economic powers of enterprise. and they will check what are the vertical integration, the forward and the backward, and all the kind of integrations to see they to take a call on this issue. They will also check the dependence of consumers of the enterprise. Dependence means how consumers are dependent on this particular product. They will look into that aspect as well. And then they will check whether is there any monopoly existed, whether there is any monopoly created in this particular market for this product. They will also check in that parameter as well. They will check any entry barriers, including barriers such as regulatory barriers, financial risk, capital cost of entry, marketing entry, technical barrier, economy of scale. Think from the countervailing buying power. What are the buying powers available? What is the current buying power for this particular product? They will also think from that angle. They will also see social applications and social cost. Now, move on to the next area, procedure for enquiry under Section 9. Okay, under what situation Competition Commission directs for an inquiry? And a situation where a certain situation demands for an inquiry, the Director General, who is appointed under Section 16, will conduct the inquiry. Okay, this Director General will conduct some inquiry, and the Director General will give the report to central government and as well as to Competition Commission of India. The Director General shall submit a report on his finding within such period as specified by the Competition Commission. The Commission shall forward a report received by Director to respective parties. They will share this report to both the parties. After inquiry, Competition Commission will take certain action for the betterment of both the parties. So, Competition Commission is the final person who is going to take some action again on this. Combination is very, very important from examination perspective. What is combination? Any individual or a group where go for some acquisition or mergers or any kind of dealings, as a result of which they get some superior power, and these are called as combination. So competition act defines combination as whether individuals go for certain acquisitions or mergers or any kind of combination, as a result of which both the parties involved in this particular combination holds some asset criteria and turnover criteria. Combination has been classified into these two criteria. We are going to look into this combination into these two aspects. One is asset and the next one is turnover. Let's see asset. So every time we are going to discuss about the points, there are 2 points. There are going to be 2 classifications. One is for asset and the other one is for turnover. Please bear this in mind. Okay, let's start with point number 1. If these individuals in India hold assets greater than 2000 crores or turnover greater than 6000 crores. Like I said, first one is for assets 2000 crore and the next one is for turnover which is greater than 6000 crore. Or if these persons holds in India as well as in outside India holds asset greater than $1 billion and within that 1 billion at least greater than 1000 crores of assets in India. This is for asset. I have not gone for turnover. I'll repeat. If these parties holds in India as well as outside India worth of assets greater than $1 billion and within that $1 billion at least 1000 crores of assets should be in India. And now let's go to turnover. Whether these people, individuals hold in whether these people, individuals, achieve certain turnovers both in India and as well as outside India, where the turnover exceeds $3 billion and within that $3 billion, at least 3000 crores of turnover should be in India. I'll repeat. These parties should achieve $3 billion turnover in India and outside India. As together, if you consolidate both the turnovers between, if you consolidate the turnovers of India and outside India, if that crosses $3 billion and provided at least 3000 crores turnover in India, then it will be considered as combination. Now we have discussed about individuals. Let's go to the group. If you are going to discuss about group group is very simple. If we understand individuals, now we can easily understand group. Group is nothing but for quick understanding, it's into 4 times. So whatever numbers we have discussed previously, if you add 4, if you multiply 4 times of it, you'll be able to understand the threshold limits for group. That means if two groups join together and where they hold assets worth, if they hold assets in India greater than 8,000 crores or turnover greater than 24,000 crores, or and the next point B, if the group in India as well as outside India hold assets greater than 4 billion US dollars, and within that 4 billion US dollars, they hold minimum 1,000 assets, 1,000 crores in India. So that nothing but 4,000 crores in India for group. And for normal, it is 1,000 crores, and for group, it is 4,000 crores in India. And when we talk about group with respect to turnovers, both India and outside India, the turnover should be 12 billion US dollars, and within that 12 billion US dollars, minimum 12,000 crores in India. The turnover should be 12 billion US dollar turnovers. Out of that, 12,000 crores turnover should be related to India. In that case, we can conclude these agreements, these arrangements, these combinations, mergers, acquisitions are considered as combination. So Competition Commission defined combination here. So what is this combination? If any person comes under this definition of combination, now Competition Commission will not accept these kind of combinations. There are some exceptions. So when any of the parties, when parties going for combination, they have to give proper notice to Competition Commission, like they are going to go for some combination, and with proper details and what are the terms and conditions, everything they are going to share it with Competition Commission. And now based on that, Competition Commission will give their approval. Central government may exempt certain combinations, okay, not for everything, not for all combinations. They provide certain exemptions, provided, okay, lesser than or equal to 3,350 crores in India, where the assets is less than or equal to 350 crores in India, or turnover is less than or equal to 1,000 crores in India. In certain situations, central government will give some exemptions to these people. That means these people can go for certain combinations. They don't have to comply with all the procedures as suggested by Competition Commission Act. Okay. When we say group, what do you mean by group? Competition Commission suggests defined group. Group means two or more enterprise directly or indirectly involved into, whereas as a result of this combination, this group, they exercise certain control. They exercise greater than or equal to 26% of voting rights, or they exercise greater than 50% of appointment of members in the board, where they have the power. That means group in sense where each of the parties will have the powers to appoint more than, that is 50% of appointment of members in the board of directors in other enterprise. In that case, we can conclude that as a group. Okay, the third point is, as a group, they control the management of affairs of other enterprise. This is point 3. Okay, Competition Commission does not encourage any kind of competition, any kind of combination. No enterprise shall enter into combination which causes or likely to cause appreciable adverse effect on competition. If any enterprise enters into such combination, shall give notice to Competition Commission. Okay, they have to give proper notice to Competition Commission. Those notices are within 30 days of certain combinations. Okay, there are certain interpretation in terms of giving notice. The parties have to give the notice within 30 days, and if there were no reply from the Competition Commission within 210 days, they can do the combination. If so, the time limit for the other person, for the the time limit for the Competition Commission is 210 days. Within 210 days, Competition Commission have to do a reply to these parties, whether they accept this combination or not. They have to give from proper reasons. Based on that, the parties will take second procedures. Okay, so with relating to appeals, if if there is an if the person is aggrieved by an order of competition commission, they can appeal to National Company Law Tribunal. And if the person is aggrieved by an order of National Company Law Tribunal, they can go to National Company Law Appellate Tribunal. So that's the appeal provisions. So with that, that's all I have with relating to Competition Commission. I've given my own notes in the description below. Please check out the description with respect to notes. Prepare. Okay. Prepare well for your examinations. Let me know your questions and topics you wanted me to cover in the subsequent videos. Thanks for watching. Cheers.